viewers are watching Apple today after shares hit 7-month lows yesterday and are now down 12% this week. Today, Wedbush's Dan Ives put out a note saying that in a worst-case scenario, the AI delays for Apple takes 10 million iPhone units out of fiscal 2025 and into fiscal 26. He still expects Apple to sell roughly 225 million to 230 million iPhones in fiscal year 25 and sees a major upward growth trend toward 245 million to 250 million units in fiscal 2026. He keeps a 325 price target on shares. So certainly room to run from here. Joining us for Options Corner to take a deeper look at Apple, we've got the Duke of Data, Rick Ducat, lead market technician. All right, let's take a look at this Apple chart and talk about the trends that you're seeing, Rick.
Well, it hasn't exactly been a fun couple of weeks in the market, and Apple has been certainly not immune to this decline that we've seen here. Notice that we have been trending downward since we hit our highs near 260. Then the downward trend accelerated with our white line here once we started to break below our yellow 21-day and orange 63-day exponential moving averages. Now we've found ourselves in a situation where not only have we broken through this repeated supportive point, this green line near about 221, that was that area here. Now we're also breaking through this lower line here, this low point near about 214 or so. So it's kind of looking like a dicey situation here.
All right, dicey situation here, difficult period of time this last couple of weeks, and honestly just difficult year for Apple. What kind of options activity did you see in Apple yesterday or recently?
Well, like most other options, you know, for right now, March 21st, that's the major open interest month here. And the top calls, 250, 260, 270, just, you know, nice even spacing for us to talk about here. On the put side, 200, 210, 220. And these are kind of high values on both sides here. The typical activity is a bit lower. The calls mostly 200 to 270 is where the big activity is. On the put side, 170 to 230 or so. One big trade yesterday that did catch my eye, a 1,500 lot of the January 15th, 2027 200 strike puts, a long-term bearish trade, needs about 15% to the downside to break even, $3.2 million.
That is a long timeline. All right, Rick Ducat, that was recent notable options activity on Apple. Time now to go through an example trade. We've got Tom White, senior options contributor and co-host of Fast Market. So how would you structure an example trade for Apple, especially in the context of this recent kind of look from Dan Ives?
Well, I maybe push aside some of his comments on Apple over the last several months. He's been saying buy this stuff as it's gone down about 12% just this week alone. This is the worst week that we've had since 2020. That super cycle that he keeps talking about, I don't know. We haven't seen it, and he's been talking about it for a couple of years. So with that into consideration, high implied volatility levels, IV percentile rank up near about 80%, so in the top 1/5 of levels of implied volatility that we've seen over the last 52 weeks. So that gives you some opportunities if you want to take a bullish stance, but maybe give yourself a little bit of cushion to the downside here. So with that high implied volatility, what works in that type of environment? If you maybe want to own the shares or just take advantage of higher option premium where you can collect more. So I looked at a cash secured put here in Apple going out about 3 weeks till expiration. April 4th weekly options here. I'm going to sell the 205 put. You're going to collect roughly, if the stock's trading about 211, might collect around a $5 credit on that. That's what you can make on this trade if it remains above that 205 level. If you collect that $5 credit, it takes your break even all the way down to 200. That means you've got about a 5% cushion below the current share price in the stock to before you start getting some pain on this type of stock. Now, I mentioned the fact that, hey, this is a type of strategy that you only do if you are comfortable owning the shares, if you're going to remain short that put and the stock starts to fall below 205. So you got to keep that in context here. But at the same time, this is one of those strategies you can do repeatedly if you think the stock is going to remain above a specific level. But cash secured put, taking advantage of higher implied volatility here, Diane.
So that's a cash secured put. What happens, you said, if it remains above that 205 level? Are there adjustments that you can make if it starts to move against you?
Yeah, you can. As this is a short cash secured put, so you're selling an option, time decay is actually working in your favor. So the stock could actually fall maybe down to 207, 208, and the contract price, $5, can actually shrink if implied volatility falls and time decay works in your favor, a positive theta on this one. So even if the stock does fall a little bit, the price of this option might not go higher if implied volatility levels come down and time decay works in your favor on this. You got 3 weeks to expiration. You can always close it early also.
All right, it's Tom White with an example trade on Apple. Apple has certainly been under some pressure recently. Thank you, Tom.